Good morning, good evening. What's going on, guys? It's been a long while since I've seen you guys. Welcome back to the Everyday Growth Advisors pre-market live stream. I hope that you guys are having a good start to your week so far, and I just wanted to come in here and give you guys the lowdown as usual. What's going on, Eddie? Welcome back. Long time no see. Appreciate you turning up. We have a little bit of stuff to go through today. I'm gonna take a little bit of time here to explain a little bit of the macro situation, a little bit behind the technicals, and we're gonna get this show on the road. So I just wanted to kind of give you guys some life updates, tell you guys where I've been, tell you guys the plans that I have for EGA this year. It's been a long while since I did these live streams, so if you can hear me, maybe just very quickly give me a thumbs up in the chat, or just tell me that you can hear me. That would be great. But yeah, it's been really nice to have the EGA tribe still kind of part of the scenes that we've been having in the background. For most of you that don't know, this past year has been a bit of a mix for me of different emotions. I got recently engaged, so I will be getting married this coming August, and it's just been a lot of moving parts in the past year. My family was obviously visiting for a while, so I had to take some time off from trading, kind of focus on life a little bit, just kind of put all things in perspective and take a little bit of a break. All things said, I did close last year with about $300,000 in profits. And obviously at the start of the year, as usual, I started my portfolio back at $100,000 this year. So I've been trading quite light because, the start of the year is always the toughest to kind of get your head in the right direction. But I have no doubt that we will be well on our way to close another year of nice little profits. Now, let's talk about the macro conditions a little bit, because I know that some of you have been a little confused. The news has been a little bit helter-skelter on these things, so I want to put things in perspective for you guys. Obviously, back in, I want to say, sometime around, what was this, March of 2023 was a time when we were kind of looking at a potential bottom on the S&P 500. And for those of you that have been following along with us, this is where we made a massive call out to go long on the market. And since then, we have never turned back. We have seen a huge wave to the upside. There have been multiple opportunities for you to kind of buy the dip. But it has been nonetheless a really good call out from this moment here, once we form that higher situation for 2 consecutive time frames on the daily. And then, after that, we had a massive unwinding of positions. Now, once we came down into this area right here, this was a nice correction for the time between August and all the way to October. And then after October, we had a reversal in the Fed decision making, where they were warming up to a potential rate cut situation. And so that's kind of what has been going on since we kind of last spoke. I think the last live stream that I held was honestly when we were somewhere in this area here, back in about May, June, July. So it's been a little while since we have had a live stream, and I wanted to come on here and kind of give you guys my perspective on things. Do note that from now on, live streams are going to be Mondays and Wednesdays, with Fridays taking a break, because I just have other commitments on Fridays that I can't really promise you guys that I'll be. But however, having said that, me, as much as I can, I will be around and try to hold these live streams as regularly as I can. For the longest time, for almost 2+ years, we were holding live streams for Monday, Wednesday, Friday. And, it's just a matter of things, just getting back into the flow of things, that eventually that will come back as well. So, macro perspective. The Fed had a reversal of their expectations for interest rates somewhere around here. The PCE deflator, which is the preferred gauge for inflation for the Fed, was starting to show signs that inflation was starting to get under control, close to that 2% rate at which the Fed was deciding. Ever since then, we have an explosive move on equities. and we've seen the S&P 500 rally, close to about 14% from this bottom all the way to the top where we are right now. And that has been a good look in terms of where macro perspective has been. But I think a lot of you have been looking at the news and looking at what has been touted on the internet or Twitter or whatever your news source is, to kind of show that this kind of move in the market is a little overdone. And I think a lot of people here were thinking that we're going to get a pullback. And if you are a member of our Discord community, you would know I've been posting a lot of the research reports, giving you guys the insights in which the positioning from institutions has been that in this area right here is where institutions have been unloading quite a fair bit, but also market makers have been forced to take opposing positions to hedge the exposure that they have, thus causing a further spike up that we've been seeing in the past week. Now, does this mean that this is going to go indefinitely up to the upside all the way up to 5,000? It is highly possible because this is a potential short squeeze here, right? But at the same time, we have seen institutions unload majority of their positions between this 46.90 all the way up to 4,800 level. And just from the macro perspective, you need to entertain the idea that up here, as usual, the market has a rhetoric that is following right now where the general consensus is that we're going to get multiple rate cuts in this year. And my consensus, which obviously for entertainment purpose, is that I don't think that the market's actually going to believe the crap that the news and the bond market is kind of purporting here. So I think this year what we think that the rate cuts are going to happen with half the expectations. And in this past couple of days, we've already seen signs of that. So I want to share a little bit of data with you guys because, for those of you that are not part of Discord, I feel, you can also benefit by knowing some of this information. So first of all, in the next 1 month, we have in a flat tape, we have $9.6 billion worth of buyers, $21 billion worth of buyers in the up tape. And then in a down tape, we have a whopping $259 billion worth of sellers. So honestly, right now, the main thing is when is the selling pressure going to step in? That's one of the major takeaways from this information. And then we have a follow-on report after that. Let me see, where is it? Here. That kind of updates the situation a little bit. And here you can see the numbers change a little bit. This is over the next 1 week. Which was last week into this week. So we have sellers sitting at, in a flat tape, we have selling of about 17.5 billion. Up tape, we have 5.2 billion worth of selling. And then in a down tape, 44 billion worth of selling. So a lot of this pressure is to the downside, mainly. Now, I know many of you are thinking like, oh, if the pressure is to the downside, then why is the market ripping? Well, you need to understand the dynamic between a market maker's exposure and the actual CTA exposure. CTAs don't really care much about the fact that prices can keep going higher. They're in the world in which where prices go higher, they just continue to sell and take hedges against their existing portfolio positions. So the other dynamic here that interplays with this is the market maker exposure, which is when the prices start to go higher, the market maker has to go out to buy puts against people who are buying prices higher. And in order to hedge those positions, they have to go out into the market and hedge by buying S&P 500 futures short positions. So that whole dynamic here is causing a squeeze to the upside, which, I posted this chart last week in our community where, 49.22 is a obvious upside target if we had reached the 4,800, which just happened, 2 sessions ago, which was on Friday. We had the breakout. And today we have a little bit of a continuation. Now, financial conditions are very loose and they have been loosening for a while, right? But what's also interesting is we're starting to see a little bit of a cool-off period here where some of that is coming back. And as usual, as I like to say, the only way to accurately assess the stock market is to look at what the bond market is doing, right? So with the bond market here, for example, TLT, the 20-plus year, bond ETF, We've seen a little bit of a inverse head and shoulder pattern that is showing signs of a potential bottom here. And today we are just up a shy 1%. And this could see continuation to the upside if the market starts to rip higher, right? The other thing about this dynamic here is that there is a opposing side to this view where the Treasury has not fully decided that, not the Treasury, but the Federal Reserve has not fully decided if they are going to start buying bonds back, right? And that's kind of the confirmation that everyone's waiting in order to start getting into this heavy side of the bond market. Of course, if you look at all things else considered, based on the Goldman Sachs Prime Book report, we're seeing shorts are leading the longs by about 2:1, as this report indicates here in just the month of January so far, right? So with the shorts being a very dominant position of market, we could see that market maker exposure will be capped to continue melting up in a short squeeze, which is the topic of discussion today, right? Now, on top of that, there is this nice little report which I posted on Discord from Academy, which really kind of synergizes my view as well. And so if you want full access to these reports, you can always join the Discord community for 14 days for free. I've posted some estimates for earnings as well, for example, for Netflix, for Tesla, for Intel, and for I think IBM here. So there's a whole bunch of reports here we post. And then you have the U.S. economic calendar, which on this Thursday will show initial jobless claims. And then also on Friday we have the PCE deflator, which will be coming out, and core PCE deflator, as well as pending home sales, which is going to drive a lot of action towards the end of the week. So that's this week. The whole of next week we have ADP employment report. We have also initial jobless claims and non-farm productivity, followed by the employment report on Friday next week. The week after we'll have initial jobless claims for this, and also revisions to CPI on Friday. So that's kind of all you need to know in terms of the next couple of weeks heading into February. Can't believe that it's already the end of January. So from the macro perspective, there is not much else to cover here, except for the market is a little stretched, yes, but it doesn't mean it can't go higher, number two. And at the same time, we have already seen institutions starting to unload positions here. So therefore, when this hammer does start to melt higher, the downside correction is going to be a bit sweeter. So don't get yourself in a pickle. Don't get your panties in a bunch. Remember that this is a long game. Try to play the long game. Don't let your psychology get the better of you. And that's just all I have to say about this matter. Now, on the flip side, of course, NASDAQ is in all-time highs. S&P 500 is all-time highs. And IWM is making a decent bounce this morning, which I'll be looking at a potential long trade very soon if we get a pullback. And the dollar index, which is the basket of dollar against other currencies, is seeing a little bit of a role reversal at the 103.63 level, which we have looked at prior, in previous times. So this could lead to the dollar going further down, which will set up a further move on equities to the upside. And we haven't seen much interest in VIX exposure just yet. So until we don't see exposure, interest in VIX exposure from both sides of the party, we don't see the need to hedge aggressively just yet. Obviously, there are some key contenders here. Just last week on the Discord, we spoke about Marvel being a very interesting trade as it started to break out at the 66.50 level, heading up into the 23.6 extension level of the Fibonacci extension. And we got there this morning, in fact, breaking above it. So we're going to gap up here a little bit. I would expect a nominal pullback, somewhere in between $1 to $2, and then a potential further clinching of 74 and then eventually up to 79 in the coming weeks. For those of you that don't know, this is a position that we have a long swing on. So this is something that you might want to consider looking at in the next couple of days if it gives a healthy pullback. Another one that I've been looking at is Datadog, which cybersecurity. Now this is one of the sectors that we've been looking at for a while. Because of its attractiveness in lieu with technology stocks, right? With the semiconductors booming and just technology as a whole being very strong, a lot of cybersecurity is a well sought after sector after being sold off and being in consolidation phase for most of 2022 to 2023. So these are good opportunities here where you can get entry on a long position, especially this one, which all-time highs are pretty far away at 200 bucks. Currently trading at 130. Of course, there's not only just this, there's also Zscaler, which is another one which is at pretty much close to making higher highs here. Then the other opportunity here that I really like is Roku, with a potential dual zone exposure here, bouncing off a key level from the past resistance level here. And you know, it looks like this level aimed at a very nice demand, and if we see continuation with the pullback healthy that is able to bounce at these previous levels, we'll be looking to take a long entry on this one. Moving on to energy and oil in general, we've seen a little bit of weakness in this sector in the past couple of weeks, but if we don't see an aggressive move further down, I think I'll be inclined to take a long position here and close out my existing short position on XOM. So I'll be looking at this from that perspective. Now Meta, heading into all-time high territory this morning, gapping up, moving into this 386 level, 387 level. And I think this is a level at which, you know, if you want to play the FOMO move, I would take a very calculated approach here to play the FOMO move. But based on that, I don't really like, you know me, I don't really like buying things when people are all kind of crowding the trade. I like to wait for the pullbacks here. Microsoft heading into the sub $400 level, all-time highs, hitting that 23.6 extension level at 401.60, with 412 being the next key level, and then 430 being the 61.8 extension. This will be one that I'll be watching more than Apple, if anything, because of its market cap taking over, which means it'll have a higher allocation in terms of the holdings for the S&P 500. Semis, AMD, this one's all-time high. Shopify has a potential upside. Home Depot is another one that's kind of breaking out here that has, although I feel this sector is a little less likely to rally so strongly, I think that this sector has some potential upside. You also have FedEx that has been kind of muted here for the past couple of days, forming a descending wedge pattern that could potentially break out. And then you have Coinbase here on the daily that is forming a nice hammer, which could show a potential temporary bottom for the upside. And honestly, I would be quite comfortable taking some 140 calls here on Coinbase within a 2 to 3 week out expiry. The other one that I called out on Friday was PayPal. I wanted to roll this position, but I took a good 40% on this. So this is another one that I think has some buy the rumors, sell the news kind of event. I think the CEO came out saying that they have a big surprise and yada yada yada. So I'll be looking for an entry on this one for a pullback anyway, and then I'll be exiting that before the 25th, which is where the news is supposed to come out. Let's all move to Tesla, which is a very interesting pattern. They had a fake out of this descending wedge pattern, and has snagged a little bit of this potential dual zone where liquidity exists. Now the interesting thing about Tesla here is it hasn't quite shown a bottoming out pattern. However, if you don't own Tesla shares, this is a good spot here to sell some 190 puts, more than likely, receive a little bit of premium. You'll probably end up owning it at around 180 or 185, and that's not a bad price to own this stock. However, I will be waiting for this strong bounce here to take some upside. As you guys know, Tesla doesn't follow the conventional market performance, so that's kind of where I'm going with this one. Amazon breaking out of its previous level here, but this is a war zone. So I don't really like this trade that much because this area here is all full of massive choppy energy, and just getting into the zone here and breaking out of it is going to be a bit of a pain. So I do see Amazon snagging and trying to potentially go sideways here for a little while before breaking out, if anything. So I wouldn't want to go gung-ho on this position just yet. Google approaching its supply zone. So this is an area where you're going to see some natural resistance, some clearing of positions, some profit taking, and that might be in line with the pullback on the S&P 500. So you want to tread carefully on this. Now with the S&P 500, as I said, the aim here is 4922, eventually 5,000 if we can get further up to that side. In fact, let me just kind of extend this a little bit so you can get a good view of where this could potentially go. But the idea here is essentially for the S&P 500 to kind of rally up into this 5,008 level, eventually, kind of move like this, probably a pullback, another move, and then eventually up here to reject or false breakout above this parallel channel that has acted as a resistance for a long period of time. So that from a technical perspective, that's what I look at on the S&P 500 here. And yeah, that's all I kind of have for you guys today. I try to keep these as short as possible, and of course I'm going to open it up to questions now. What kind of questions you guys have? You have specific tickers for me to go through. I'll give you guys a couple minutes here to kind of ask me any questions that you have about the market, and yeah, we'll do it all over again on Wednesday. So it's been really nice to be back here and kind of do this all over again. I hope that you guys have been doing well. The world has been a crazy place lately, and I've just been kind of keeping my head clear and just doing my own thing. But for those of you that want to know, I had a very nice summer last year. Traveled to a couple different places. Went for a music festival in Lisbon. Called Boom Festival. Then I went to America to travel and kind of visit family for a little while, after which I came back to Singapore, and then I shortly got engaged after that with my fiance, who I met about 8 to 9 months ago. So it's been quite a unnerving year, but it's been nice. I have no complaints. Life has been good, and I've been just kind of taking a little bit of break and having a little bit of a balance, because after 3 years of working nonstop, it's been a nice time. MasterCard. Okay, so this one is an all-time highs, and if you want to start to find where the extension targets for this is, I would go and use, let's see, we could use this wave here. There we go. Okay, so just based on a daily extension target here, see here. Okay, so we are currently at the 23.6 extension. This stock is now in all-time highs. I do like this and Visa over most of the financial stocks right now. So 23.6 extension is where we might see a little breakout and pullback. We need to retest this level, obviously. Once we retest this level, we get a little bit of a base forming here in this area. Then we can use it as a launch pad for the potential 38.2 extension at 449. And then after that breaks out, comes back, tests that, we can have the 61.8 at 467. So all in all, that's what you're looking at here. The risk to reward ratio to the upside obviously is not that great, but when stocks are in price discovery, that's always a good momentum move more than anything. Just note that volume has been a little low here. So you might want to take that into account here, because if selling pressure comes out of nowhere, then buyers are really going to get taken off guard here and be forced to be liquidated, which will cause a further squeeze on sellers. So that's something that you got to take note here. D-U-O-L. Let's see. Oh, Duolingo? Dude, I fucking hate this stock, bro. Actually, I fucking hate this company, because I tried using it once and then they started guilt tripping me into using it. You guys ever used Duolingo before? If you don't turn into the app for a couple of times, after you use it a couple of times, they guilt you into using it. They're like, hey, you didn't show up, like you gotta show up, and I don't know, it's just a weird ass thing. It's kind of funny. I don't know. I'm just cracking a joke here. Forgive my weird, ill-mannered joke. But Duolingo here, I mean, damn, I didn't even know this thing IPO'd. Let's see, August 2021. It's been a very big consolidation phase. Looks like a markup here and then another markup phase here. As long as you get a nice little bounce in this area where you can see this dual zone at, let's see here, around, yeah, somewhere around here. Between 158 all the way to 183, this looks like a decent entry. I mean, I would watch to see how this daily candle here today is going to close, and just kind of observe the price action. What you really want to see here in order to take some upside is a firm break above 204.50. Right? If you get that firm break above 204.50, retest off for 204.50 or lower, let's just say all the way down to about $200. and you see a bounce in this area, then the long position is going to be an easy one to kind of play out here. But if you see a rejection at 204.50, that's going to more than likely result in a downward movement instead of an upward movement. So your 204.50 level here is really going to be kind of a risk off, risk on kind of vibe. And let's just have a look very quickly at where that volume positioning is as well. Let's see. Yeah, so this one, there's some decent volume at 210, so that's going to be a natural resistance. Let's see. Okay. Yeah, I mean, honestly, this 212 is not that strong either. So I would say if you can break past 210, 212, that's going to be a revisit of the 242 level. And that's a nice long trade, because then you have your 1:2 risk reward ratio, downside, upside kind of move. If you reject at that 212 level, then you're going to see a revisit back down to 160s. So I would use this area here around, let's see here, around this area here. So 205 all the way to 215 is really going to be your risk on, risk off level, where you have the potential for a role reversal kind of scenario. So I hope that helps you out, DeMario. Welcome into the stream, by the way. Thanks for taking the time out to be here. Costco, let's have a look. I haven't seen Costco in a while too. Is this one an all-time high? Yeah, this one's all-time high as well. See, these kinds of charts are just a little difficult to chart right now. So the thing is with these, the only thing that's going to save you here and give you some upside targets, or like where your rejection is going to be Fibonacci levels. So just basing off, let's see here, this wave is completed. Let's see, hold on. You have a 1, 2, 3, 4, 5 wave here. This is the first wave here. So yeah, we could use this wave right here. I think this bottom to top scenario here should be okay. Let's see. So with Costco, you are approaching the 38.2 extension at 698. 61.8 extension will be at 706.94. And that could be, this is going to be a key level here, and then after that it'll go to try and retest 706. I think big resistance here at 706 more than likely. And you should also look at some of the dark pool levels here to see where institutions are unloading some of their positioning. But essentially, this is all going to be a support levels here at 672, 681, 682, the previous high. 692 is going to be also another support level. And yeah, okay, let's see where the volume profile is with this as well. Obviously, you don't have much volume up here. So it looks like 665, that's the key level here as well. So I will look at those key levels for Costco. Honestly, I don't like this very much to play it either upside or downside. So I would take it carefully here. CRM, let's see, CRM. Okay. There we go. CRM, is this, yeah, this hasn't hit all-time high yet. Oh, this could easily hit all-time high, right? I think this is a nice one. See, like the rest of the charts, this one just recently cleared its level here. So with this, the main thing you need to be careful of is a potential pullback on NASDAQ. That's what I would be very, very careful on. But yeah, you're right. If you break above 284, that's kind of like a ride into all-time high at 300-ish. And then if not, it rejects back down to 270, which is your previous kind of pivot point here. So I do understand what you mean about that. Argument from the low of March and the top of April 22. Oh, yeah, that's fine. I mean, I'm pretty sure it's subjective, right? So remember, fibs are all subjective. There is no right or wrong. It's just based on your analysis of your preferred choice. So I hope that was helpful. I hope that you guys find these streams as educational as before. If you're here and you're listening to my voice and you miss these live streams, or you missed the educational part of this, go ahead, put a comment down in the chat. I want to hear from you guys. It's been a long while since I heard from you. And of course, make sure you smash that like button on the way out. I do appreciate you guys taking the time out to be here from your day, and of course, I'll see you back on Wednesday. But yeah, show some love to the channel and the chat. Yeah, I just want to hear from you guys, honestly. See how you guys are doing. So, how are you doing? I'm about to hop off here in a second to just get on with my trading day. Who missed the live streams? See, S&P 500 roaring out of the gates here. I wouldn't expect a very big, move down until we hit this 49.22 level. So still quite a fair amount of upside here. Missed live streams. Oh, it's nice of you guys. Well, now it's going to be back Mondays and Wednesdays. So I hope you guys have a good trading session today. I'm going to hop on with the team on Discord. It's been a while. Definitely missed them. I'm glad you guys, kind of coming back here and tuning in. I appreciate you guys taking time out. I'll see you guys back on Wednesday. Till then, peace out, take care, and on to the next one. Bye, guys.